Hello, active traders, and welcome to our live broadcast here, Trading Week Ahead. This is Ken Calhoun coming at you live from Colorado Springs, Colorado in the Rocky Mountains. I'm president of the Day Trading University, Trade Mastery, and 60 plus other websites for active traders. Really thrilled to see so many of you here. We've got record-breaking attendance as usual. As always, all information is for educational use only. I'm not making any buy or sell recommendations. No profitability or performance claims are being made. Are you ready? Let's do this. You may have seen me in Stocks and Commodities, Active Trader Magazine, the Traders Expo. I will be speaking in Vegas, Friday the 22nd, November, at the Expo in Vegas, live at Caesars Palace. So you guys can see me again. Give me a standing ovation like usual. Nice to see. Here's me with one of my personal seminars I did. Here's me in my $3,000 Brioni suit with showgirls and lots of thrilled traders in one of my Trade Mastery Vegas events. Why showgirls? Because I can, right? Why not? Anyway, I like to live large. Any questions about my courses, feel free to ask tonight, or this morning I should say. I will answer those. So many of you here, I don't have time to answer how to trade questions or trader's choice charts. We'd be here all weekend. But if you do have a question about my courses or the live room or anything else, let me know. That's what I'm here for. So thank you for being here. We're up to 1,998 confirmed registered. Actually, here's my live login for proof that it's not some Photoshop. It's me clicking, logging in. We're at 2001 now. So we finally broke 2,000 resistance. That's an epic, historic, landmark, legendary webinar turnout in the entire webinar industry. It's very, very rare to get over 2,000 people registered for a live event. So thank you all. You honor me by being here. I really appreciate you all taking a bit of time out of your Saturday to be here. You guys are making it a big success, so this is for you. This goes out to all of you. I salute you. If I had some champagne, a little early for champagne, but if I did mimosa or whatever, this is for you guys. Remember to tell a friend, and thanks to all of you who've been posting on Twitter and Facebook or just emailing to a friend, hey, check out this guy's Saturday events. I appreciate that. Tell them about it. Actually, I don't know how many more people we can have in the room, but anyway, great to see you there. If you're not a member of my live trading room, feel free to give that a shot. It's an outstanding way to learn in our rally markets how to trade, and now includes video downloads, and for the first time ever, I'm now including these Trading Week Ahead recordings in that as yet another incentive for you to join the live trading room at tradingtheopen.com. I put in videos each day from the live room sessions that we do. We do monthly Saturday webinars, and now for the first time ever, almost a year I've been doing these Trading Week Ahead events with so many thousands of traders registered. I want to have the recordings available for my live room members. So that for all of you who are live room members, the video of today's event that I am now recording will be up there later today, so you can download that at your leisure. Also, for those of you who want to sleep in on a Saturday, or if you got travel plans this summer or whatever, join the live room and you can get access to the video of the week ahead. So another bonus, really excited about that. Trading strategy of the week. We're going to look this week at rally breakout trading. It kind of makes sense, right? I'm going to add some new tactics. We're going to do this at the end of the alerts segment. I want to cover the alerts, and then we're going to do this. And we're going to look at multiple breakout scale-in trades. It's how to trade sequential entries, position sizing in this market with some specific chart examples. You'll also learn how to do strong sector basket entries. For example, I don't know how many of you are trading semiconductors, or the healthcare sector has been really strong in pharmaceuticals. We've got really strong multi-moves in different instruments in the same sector. Or for Forex traders, for example, the yen is weak. The Japanese yen has been weak. So, if I trade the euro yen, I'm also going to throw off a trade in the dollar yen to capitalize on that. So make sure that you're looking at basket entries as well. And how to use strong candle and cup patterns to size up. So we're going to do that toward the tail end of today's broadcast. With that, let's go ahead and get on with it. And let's take a look at this week's charts. What's going on in the S&P? Well, if you remember, last week I told you 1610 would be the breakout trigger in the S&P. Thanks, Charles and Ray, for asking me for the S&P triggers. Week ahead, use 1628 and again 1635. Relatively tight, 1628 and 35, R1 and R2 on the S&P. I'm going to be fading back to cash if this is a fake out and they all sell the high, which may well occur. We may well see a big red sell-off day or two next week. Wouldn't surprise me. We're more likely to see a rally continuation. Buyers are in charge of this market right off the bullish engulfing off the 50 MA. But if we lose 1600 support again, I'm going to be scaling out back to cash under, say, 1590 or so upcoming week ahead. So that's market triggers to use for how to trade. Now let's take a quick look at last week's winning alerts that I posted for you guys, that I called for you guys on the 27th. I told you AIG would be a good long, and it was. These are also the ones that are good for the week ahead as well. These are winning alerts that I gave you guys last week. Congratulations if you learned from those and paper traded those and made a paper fortune. Anyway, AIG was good. Disney, I've been calling the last 2 weeks DIS, the ticker. The Magic Kingdom is alive and well, and Mickey's on a run as we're moving to new highs. I've been calling this long the last 2 weeks. Disney looks wonderful. I want to see if it's able to take out new highs over the 65. Disney. Next up, General Growth. Commercial real estate for malls and all that. Anyway, you can see this one's been a nice strong uptrend. Right, good strong uptrend. Draw a center line about the trading price action and look for continuation plays. GGP, I called it for you guys long last week, nailed it. Let's see if that one takes out new highs in the week ahead as well. Am I going too fast, or y'all want me to slow down? You know, I could do it like my competitors do. Well, look at this. Now this one was testing highs about 4 or 5 times, and hey, looky here, it moved. No, Sparky, that's not how professionals do it. Neither do I. Let's move on. I'm New York style. KMX all the way. I'm hardcore. KMX is a good breakout. You can see. Sorry, I'm not a slow-paced guy. KMX. I'm a trader. I'm a day trader, so that's what I do. KMX, a good pattern here in CarMax. We have a bullish cup pattern. New highs. I always like using whole number technical ledges, so see if KMX is able to take out new highs over 47 in this upcoming week ahead. That was a winning call from last week. Congratulations if you took it. Keep it on the radar for the week ahead as well. Next up, Tenet Healthcare. Healthcare has been on a run, and I won't talk politics, but anyway, all of the healthcare related things are running up, and you can see that we've got a bullish cup, previous resistance, new support. Let's see if it triggers over the 48 the week ahead. THC, I like the gap continuation in Tenet. Keep an eye on THC. That was a winner from last week. Keep it on the radar for next week as well. Another one I told you guys long last week that worked out brilliantly was Western Digital. I called it long back here. It's ran up a good, well, 3 points. We'll see if it's able to take out new highs over this cup at 58. Well, thanks, everyone saying good pace, all good, speed okay, you're good, go faster from Mike. If I go faster, they'll revolt. They'll say, you got hundreds of traders here, and they'll be, slow down. No, sorry. I got a lot to cover, and I am not a slow-paced guy. So anyway, glad to hear it's good for everybody. Anyway, Western Digital's been good. Seagate is another good example of a basket stock play. You like to, and especially strong in a rally market. Ask any professional Wall Street trader. My institutional guys will tell you this too. Anytime you got a hot market, look for lateral plays in related instruments in the same sector. So Seagate, better than Western Digital. I called Western Digital last week. I'm adding to the mix Seagate because it's an even stronger hard drive manufacturer play. Anyway, good hardware computer space play. You can see 38. The resistance, the gap ran as usual. Minor gap continuations are my #1 signature favorite play. I've done millions worth of trades in those, and that's one of the things you need to get is these kind of patterns. So anyway, Seagate also on the radar for the week ahead. Got quite a few here for you. Last week, I told you guys long in FAS, the triple finance leveraged long ETF for finance, and you can see that one's worked out. Keep an eye on that one for the week ahead. And for the cheap stock players, on the 27th, I told you guys look out for breakout highs in NR, New Park. And you can see that that one did run up. Keep an eye on that one for the week ahead as well. NR winner from last week, I called. Let's see if that's able to take out new highs. I usually avoid cheap stocks, but I called this long for you guys because of this high volume breakout. And sure enough, it did continue on up a full point. We'll see if it's able to get legs and continue on up in the week ahead as well. Now, for this week, ARMH, ARM Holdings. That's one of my calls. Over 50, though. I'm not going to hit it at 49. I'll wait till it breaks the 50. But anyway, this one's moved up nicely from 43 to 48, a good 5.5 point run. For those of you who are new, I will be covering next my ETFs, my E-minis, and our Forex charts. So we're covering multiple markets this morning. RMH, really good chart. Another good one, Herbalife, HLF. What's not to like about that chart? Boom. Nice strong uptrend. Keep an eye on that one for potential moves if it's able to take out new highs. As a rule of thumb, and for all of you who are new to working with me, I like using roughly 35 cents above whatever 15-day high is there for swing trades. We're also going to look at intraday charts in just a minute as well. But first, let's do our swings. Herbalife looks good. Next up, Macy's. Not as good because it's got a relatively choppy uptrend, but it's done really well in Friday's market, right? A good gap continuation run. So keep an eye on Macy's Fine Department Store the week ahead. Hope y'all are taking notes. Next up, unless you're in the live room, then you'll get the complete video download of this morning's event handed to you on a silver platter. Another reason to join the live room if you're not already there. You have my word, it's an outstanding experience. Got both swing and day trading alerts and recording of the first half hour each day, so you can download and look at that if you're a swing trader at home each night to help you set up trades or learn for potential trading educational alerts for the day ahead as well. Anyway, Prudential, I like this one because the gap continued up. We've got a base off 55 up to 65, a 10-point run in Prudential. Remember, don't trade cheap under $20 stocks as a rule of thumb. Or if you do, make those a very tiny percentage of what you trade, because the big money plays are all in these type of charts. I mean, just look at them, right? So anyway, Prudential, really good breakout continuation play. Next up, Raytheon, RTN, brilliant chart, right? Another cut breakout. See if it's able to take out new highs in the week ahead. Kind of resting day yesterday, right? We had a good breakout on Thursday, resting day. Remember what I teach you guys, we have alternating, if you look at the daily candlestick chart, you'll often find alternating narrow versus wide range versus narrow versus wide range candle days, and a doji pattern uncertain on Friday, so we don't want to hit it yet, but if it does reestablish an uptrend, a very good strong momentum chart, let's see if we get additional buy pressure coming up as well. And again, for more on candlestick charts, be sure to learn from Steve Nissen at candlecharts.com. He's the only guy to learn candlesticks from. A lot of people out there copying Steve's stuff and trying to make themselves into the next candle person. The only person worth learning candles from is Steve Nissen. I've used what I've learned from him to make many, many winning trades over the years, and very pleased to be working with Steve on our courses and all that. He's the right guy to learn candlesticks from. Nobody else. Don't waste your time. Anyway, who else we got? Starbucks. Like me, it's on some caffeine. We'll see if it's able to break out new highs over 62.5. Kind of choppy, not as strong. And a quick learning tip, when you're looking for breakout continuations, look for tight, tight wide range breakouts, as you've seen in my industry articles and the rest of it. This is a good breakout chart. Starbucks, it's an uptrend, and to a novice trader may look good. That's not as good. I will still trade this one. I will still buy this on new highs, but I'm not going to buy it as much as I will in, say, things like Raytheon or Disney that have stronger charts. So gauge your trading strength based on how clean and how strong the pattern is. Anyway, Seagate, really good breakout continuation runner. I mentioned that one earlier as well. For intraday traders, for you wild and wacky day traders like me, I'm a pattern day trader. I'm a professional. I'm a mechanic. Anyway, Adobe, nice moves up Thursday and Friday. What I like about this one for a day trading chart is we've got a 1.5 ATR, average trading range. It's about a 1.5, and it doesn't misbehave much, right? When it does a breakout, it pulls back, 10, 20 cents at the most and then continues on up, right, every time. So we'll see if Adobe takes out new highs, especially good for intraday trading. Quick learning tip. All charts are not created equal. This is not good for swing trading because it's been in a channel, a Darvas box if you want to think of it that way. It's been in a box range, now it's in a new box range, but that's not a good strong uptrend like, say, the Disney, Raytheon, Prudential, Macy's, Herbalife, the others were. So this is not as good in my estimation for a swing trade, but it's still fine for a day trade because it's got the volume and the volatility. And professional day traders, we like these kind of charts. The other one that I will add to the mix for intraday traders, URI, United Rentals Inc. You can see it moved from 52 to 56. A good 4-point run in Friday's market. Again, not good for swing trades because it doesn't have a good strong uptrend, but it is good for day trades. So if you're a day trader, keep an eye on this URI and Adobe for potential breakouts. And again, I like, for scalping, anywhere from 8 to 35 cents above the previous day's high, and I buy sequential cups using time and sales for professional tape reading. So anyway, that's it for those. Let's see, for sub $20 instruments, Delta Airlines looks good. DAL, the ticker. DAL. And I like this because of volatility. It's got a 3-point run. It's not as clean an uptrend, which is, again, why I like the more expensive, better priced, better quality instruments. But Delta is good on new high breakouts. Another one I'm in right now in trading is one of my favorites, MGM. You can see this one's ran up nearly 3 points the last couple of weeks. I'm long MGM. I'll continue to scale in if it breaks out over the 15, 16, 17, and so forth. So MGM, keep that one on the radar. And the next and last of our equities is that NR cheap stock. Okay, so that's the one I mentioned earlier in the broadcast. So, all right, let's see what else we have. Let's move on to our E-minis, and then we'll do Forex, and then we will do some Q&A. E-minis, the ES, really good run here. You can see with our B-bands, we haven't pierced with any significant upper shadows the upper line of the Bollinger Band. So it's still a good long pattern. It may, gap down. It may gap up come Monday. I don't predict, but more likely to gap up here than anything. What I'm going to use, at least for ES trades coming up this next week, the long triggers or the resistance triggers to learn from, to be more accurate, are 1618.75. R1 is 1618.75 on the ES. R2 is 1622.75. Okay, so use 4 sticks, 4 handles, 16 ticks above 1618.75 for the secondary long. So 1618.75, 1622.75 on the longs. For the sells, let's be a little conservative. One of the things you don't want to do is try and scalp short following a good strong bullish cut pattern, because likely if you try to short it here, it's likely to then pivot against you. So don't try and outguess the market. It's better to just buy new high breakouts. For any capitulation or weakness, I want to see something under Friday's price action. So the first sell trigger, I'm going to be very conservative. 1578.25. That's the first place I would sell this. This is such a strong chart. 1578.25. That's not a great trigger because it's right above support, but from a momentum scalping, I would use 1578.25. The best one would be 1569.25. Okay, 1569.25. The market sells off. Keep that one on the radar for a short, but I would not try and short inside this range. It's a nice strong breakout, a cup pattern, classic Calhoun cup breakout 101 type pattern. So I'd rather just buy this up over 1618.75 and 1622.75 for my E-mini traders out there. So you know how well my alerts work out, right? So keep an eye out for those for the weekend as well. Okay, guys, now for our Forex traders, let's take a look at the strongest of our FX trades and what's going on in the wide world of Forex, and then I will answer questions. First one, Euro-Yen. This is the one multi-day high that I have here. I've got a 7-day high in our Euro-Yen, and I like that strength. It's kind of a pennant pattern here at resistance, right? Classic pattern. So I use a 7-day resistance, new resistance, yet another resistance region here, or a pennant pattern, right? Kind of, you see the flag? Okay, so anyway, nice good breakout. If you trade it inside range cups, great. If not, keep an eye on this one over 130.4, just above that, just 10, 20 pips above 130.4 on the Euro-Yen. The other one is U.S. dollar to Japanese yen. Not quite as strong because it's not at the 7-day high, but keep this one on the watch list for preferably breakout continuation. Really strong momentum here lately. We'll see if that's able to pick up some volatility as well. And the third of my Forex charts that I want you to keep an eye on, this is good for scalping as well for intraday trades, is our dollar Swissy. You can see we've got a resistance here right over the 93.60 right there. And immediate micro support, I would be using this. I would sell it right there, buy it over here, buy it again over the 94.10. Okay, so keep an eye on this one. What I like is the length of the runs, how clean they are, and the sell-off, the long, the retracement. This one has good volatility for trading. So dollar Swissy, good for the week ahead as well for my currency traders. Okay, now let me do a quick educational strategy tip because my traders have been asking for this. And what I want to cover for you right now with some current chart examples is what I call rally breakout trading strategies. And we're going to look at multiple breakout scale-in trades, strong sector basket entries, as well as using strongest possible candle and cup patterns to size up. Let's start off by looking at our daily candlestick chart, shall we? And one of the things that I want you to look for, multiple breakout scale-ins, is any new highs on an ascending three-line break pattern. And that's, say here, we've got three sequential candles of which the whole real bodies are getting larger and larger. This is not actually a three-line break because there's a gap here between each of the candle bodies, but still, we've got increasing volatility and three candles in a row getting wider and wider, and I don't see a bearish upper shadow. So that's an increasing, not a decreasing volatility pattern. When you see something like this where you see, you know, the bullish lower shadow and you see another wide range candle and then they start to get smaller, the whole real bodies, then that tells you you've got an exhaustion pending and usually get a sell day after that. So tip number one is, you know, don't buy the day after a narrow range candle because typically that will not end well for a swing trade. That's a sign of decreasing volatility. So at least when I'm looking at my own trades, I'm looking for these type of patterns where I've got increasing whole real candle breakouts that are continuing to run for me. Now, one of the things you want to do is, you know, avoid this kind of chart where it's sideways choppy. Oh, it had a big day, so what? Skip it. We don't want those. We don't want that type of pattern. We want ones that have good, strong momentum following a wide range candle day, and those are the best type of plays to look for. Now, what I want you to look at is how to scale into trades once they're in the money or once they're starting to run. What's the strategy that makes sense? Okay, and what I want you to look for is depth of not just the average true ranges, but look at the, see if you, and again, you know, look and see if you can mark out the box trading range that identifies the typical behavior of this both during congestion and breakout ranges. And so for here, you can see Adobe, you can see a good chart, 44.5 to 45.5. It's a 1-point move. Currently 46 to 47. Nice, it works out in these whole number increments. So if we buy a new breakout at 47.50, I would therefore not buy again until it gets well clear of, say, 48.7, at least a point and a quarter above the trading range on a continuation play. That's a very valuable tip that I just shared with you for professional rally breakout trading is look at your congestion regions and use that to extrapolate or use price extensions for the entries, and that's a good solid, you know, basic, you know, trading strategy. What I want you to do is be a little more cautious and add in that filter, kind of a safety filter of only enter after wide range candle days, where you've got a wide candle that's much bigger than these melted or flat candles. We want to see good volatility coming into these instruments on continuation plays. Now, as you look at developing a scaling plan, and again, for more on position sizing, learn from my colleague, Dr. Van Tharp. He just published a great book on the trading matrix, a really good book. You might want to look at that for position sizing and scaling. And it's a very good book, by the way. I skimmed through it. It has outstanding content for all parts of trading. And for candlesticks, get Steve Nissen's Beyond Candlesticks. Anyway, learn how to use this stuff and combine it into a trading plan that really makes sense in terms of, you know, getting in on the strongest breakouts. So, for example, Starbucks, you can see here, if you see, and by the way, if you see a pattern where you have these narrow candles, a wide range candle, but then you see a gotcha, you know, doji pattern, then that tells you not to buy that day after, right? Or if you did get in, you put a stop it right under the low and maybe take a small haircut on the ones that do work out. You have narrow, wide range candle, then you start to scale accordingly. And when you see a wide range candle like Starbucks yesterday, I'm looking at buying this myself over, say, 62.50, 64.50, and so forth on scaling in, okay? And you're trying to figure out for yourself professionally where the best plays and what, you know, what's the typicality, what's the average trading ranges during congestion versus breakout plays, and where do things move when they do get legs or when they do get some kind of pattern that's worth trading. Now, for example, Western Digital compared to Seagate, Seagate has much better momentum because the wide candles, right? So this one's a better candidate for a swing trade than Western Digital because of all this institutional high volume wide range candles. If you look at Western Digital, you see a doji, you see kind of anemic, half-committed volume here. They're not real thrilled about buying this one. Okay. Now, again, you notice that we always get the pivots off the 50 EMAs, and we are always scanning for these in my live room for both intraday and swing trades, right? We saw that in S&P, too. Remember, I told you guys that. So look for these pivots. Better if there's a hammer at a 50 EMA. That's the best pivot, or bullish engulfing, but we still have support here. What I don't like about this, though, is that we don't have a nice wide-range candle telling me we have convincing buy strength in Western Digital, say, on Friday. They're very undecided, and the volume is down. It's a red day. So if I had my druthers, I'd be buying Seagate because it's got big volume and nice big candles. So they're both hard drive, and they're both decent uptrends, but this one's a bit better because of that type of pattern. And as a trader, as Steve Nissen would say, you're always trying to be a market detective, and he's exactly right. You're looking at combining candlesticks, Western technicals, and risk management. That's what Steve teaches, and he's exactly right. And I teach, my own breakout momentum plays. And one of the things you want to do is develop a professional plan that makes sense, that gets you in on the best of these trades and keeps you clear of all the choppy charts, the things that are sideways. Heck, even Intel, which I usually don't trade because the trading ranges are flat. Even Intel, a chip maker, really strong price action lately. So we're in a world's best time to be an active trader. Remember to studiously avoid the evening news, because had you done that, as a colleague Jeff Gitomer would say, the bad news, and he's right about that, you would have missed out on a big run. Like my price action mastery course, we started back in November, December, and I was telling everybody exactly what to look for throughout this last 4 months of record-shattering runs up. Those are the type of things that keep you in the game as a trader, and also being able to differentiate between some of the strongest of the patterns out there, and hopefully standing clear of things that get you in trouble. So now back to the topic, strong sector basket trades. Green Mountain Coffee, GMCR is the ticker. Decent, not real strong price action uptrend, but still good. And Starbucks, both moving together. Starbucks a better chart. They're both coffee manufacturers or coffee makers, both worth taking a shot at. Just like Western Digital and Seagate, right? So look for these kind of similar patterns within the strongest sectors, and whatever is taking a lead. For example, lately it's been retailers have been doing okay, like Macy's, right? Macy's has been on a run. Notice the shooting stars here in a tweezer, railroad tracks, gave us a sell-off. We finally got a new buy signal yesterday on a new breakout in Macy's. But retail, pharmaceutical, and healthcare have been strong sectors. Keep an eye on those sectors moving forward in your trades for the week ahead as well, right? It's my mission, my goal to get you guys on the right side of your trades and hopefully make winning traders out of you. Bullish engulfing at 50 MA. You should have known to buy that right in S&P. That's why I called it long there. Anyway, make sure you're trading smartly and, doing well out there. So anyways, with that, we're about to wrap up here. Let me see if there's any other quick tips. One of the most important strategies that you will learn as a trader is to add to winning trades. And the trick is how fast and how furious and when and where. Well, in a rally market, you want to play it more aggressively. Your foot should be on the pedal, right? I am so enthusiastic about this market, right? I even bought myself a new classic vintage silver Saks. The wife is getting a bit frustrated because the upper landing of the state here is starting to resemble a music store because I got all these classic horns that I got. Anyway, I'm a horn player, so I like collecting antique silver horns. They look and sound wonderful. Anyway, in this market, when in more aggressive entries, I like to scale into my swing trades every point or so. I will use every whole number as a technical ledge above which to buy. So, for example, Disney, I may be buying it at 65.35, maybe 65.50 on a breakout. If that pulls back and I stop out, it's going to be no more than a point. Okay, 64.70 or so would be the stop on that. I will buy it again, though, if it keeps running up over, say, 65.8, 66.8. and so forth. So add to winning trades every single point during a multi-year rally like we're seeing right now. Now's the best time to be trading. Anytime you see multi-year rallies, mom and pop kettle on the farm in Omaha is going to be getting the money out of their mattress and putting it into their mutual funds. Okay, well, that's their idea of excitement in the markets. Little do they know. Professional traders, they're selling to amateurs at highs, so be cautious up here, but do gradually scale into new high breakouts because we're likely to see additional cash inflows from both, rich people overseas that got lots of money. Recently read a story about how some Russian billionaire bought a lot of stock in, I believe it was Apple here. Again, and you can see a classic recovery pattern in Apple. So, I mean, long-term, big picture, new highs in Apple, probably good for a swing for those of your Apple traders with the hardest stop stop here at the 440. Anyway, but anytime a Russian billionaire puts lots of rubles into one of our instruments, it's something worth keeping an eye on as well. So anyway, we got great markets to trade right now. I mean, you throw darts at the market. Hopefully you're on the right side of it by trading the strongest of the instruments out there, whether it's things like Herbalife or Prudential or Disney or others out there that are making record new highs. It's a great time to be trading, and you folks have been great too. So thank you for being here. I appreciate it. This has been Ken Calhoun with our Trading Week Ahead broadcast for May 4th.